everything in trading is support and resistance. And if we can get this part understood, defined, and as unemotional as possible, think automated, we're going to be on a really good path for trading in 2025. In terms of support and resistance, I'm going to talk about some of the levels on my chart, and then I'm going to invite you all to a session where I'm going to walk you through examples so you can start to put this together for yourself. So let's get into it. First of all, support. What is support? I think it goes by sometimes a lot of different names. Support can be a floor. Support can be oversold, right? Oversold is another verbiage for support, right? Support could be buyers or buying, and then support is also then demand, right? Because that's what buyers and buying does. This is all the same thing under this idea of support. Okay, so then resistance, well, pretty simple conversation as well. What's resistance? So if I think about what resistance is, my Trekkies out there, you're thinking already, resistance is futile. Okay, what's resistance? It's a ceiling, right? That's a kind of normal verbiage for it. It can be also overbought. Now, the overbought and oversold is conversation that is going to be pretty common this year because we're in a lot of chop, and that's where overbought and oversold is really a big part of the conversation. What else is it? Well, it's selling or sellers. And what do they bring? Well, selling or sellers is, of course, supply. It all means the same thing. What differentiates all these, from one from the other is what type of information are we using? Are we using price? Are we using, whatever it is? How are we calculating it? That's the big thing. And this is where traders get really turned around. There is never going to be a time where I'm not looking to focus on support for buying and resistance for selling. Now, buying could be buying back a short, selling could be a target for a long, but at the end of the day, I want to be a buyer at support, I want to be a seller at resistance, not the other way around. In other words, if we come up to a resistance level like this, now, what is this? This is NVIDIA, by the way. So if we come up to this gold area on my chart is a volatility-based resistance zone. So this is resistance, all those things we talked about. Ceiling, sellers, right? Supply. So that's a resistance level. This could either be a target for somebody long, right? This could be also a trigger for a trader to get long puts. In other words, overbought. We would expect markets to come back down off that level. All right, on the flip side of that, where's the support here? This is volatility-based support right in here. And this would be where the buyers, the buying, the demand, the floor would be. Now, volatility is one way to understand support and resistance. Another way to do it, and it's completely irrelevant which time. I'll do this a couple of times. This is NVIDIA. All right, here's another way to look at it. So here we have an automated set of tools. This is the Darvas 3.0. This is support. This is resistance, right? Okay, what do I want to do at resistance? I'm either looking at getting long puts. I'm looking at a short sell. I'm looking at this level to be sellers, to be an obstacle to the upside. It's a ceiling, right? Okay. Then this could be potentially overbought. That's what this is right here. This is my secret squiggle. Yes, I just always wanted to name something the secret squiggle. And this is overbought right in here. As we get down to the lower end of this range, this is then support, right? And so that's what we want to remember. I always want to be focusing on whatever that level is holding, which is completely different than what I would say probably 80 to 90%. So wait a minute, Rog, this isn't what everybody does? Oh gosh, no, right? Most traders are going to do this. They're going to want to find a buy or a reason to get long at or through resistance, and they're going to look for a reason to get short at or below support. That's what most traders do, which is why higher highs tend to beget more higher highs because you've got a certain segment of the trading population saying, oh, the market's making a new high, it's clearly going to keep going, as opposed to instead buying support and taking advantage of taking profit at resistance. Let's use gold as an example, right? Here's gold. Now, this is an uptrend. And if there's an environment where momentum trading can work, right? I'm not a fan of momentum trading. What's a momentum trade? A momentum trade is buying as we're making highs, right? It could be anywhere along this, but let's face it, most traders are kind of late to the momentum trade because you need evidence of momentum, and that means the market's moving higher. Now you might say, Rob, that worked pretty well. It did. You know, in a trend, you can get away with it. I'm using that verbiage very carefully. You can get away with it. But let's think about what buying at support would be defined as. Buying at support would be buying in here, 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 right? Here. That's buying at support. This is the contract of gold, which you can also look at GLD as the ETF alternative. We're actually long this in the Sector Secrets Mastery. We'd like to do it again. So when I look at that, what's the advantage here? Rod, you know, why can't I just buy a new high? Most traders do that, right? Well, let's also remember most traders lose money. If I buy in this area, my risk reward, so my potential for reward and my risk are far smaller. The amount that I'm risking, whether that be percentage, whether that be dollars, whether that be points, is far less when I'm a buyer of calls here versus a buyer of calls up in here. Same thing goes for every one of these dips. Your risk is going to be far greater than your reward, usually when you're buying near highs. And you're absolutely reliant on someone looking at that new high and thinking that's where I want to get in. Now contrast that with what we like to do, which is keep my risk rather small and keep my reward far, far larger. And buying at the dip allows me exactly that opportunity. So buying off support. That's an example on gold. What about the S&P? All right, let's go jump on over there. Same thing. How am I defining support and resistance? So I've shown you two ways that are automated on my chart so far. One is looking at the resistance and the support of my daily price movement range, which is an automated tool to identify volatility-based support and resistance. The other tool that I highlighted was the Darvis, the automated Darvis, and those are those yellow. We have some yellow lines here. These are all automatically drawn. There's no setting to shift, nothing. It just looks for a pattern and does all this great stuff automatically, right? On any time frame, by the way. So I can look at this, of course, this is resistance. All of this here to the top, this is all resistance. And by remembering this is resistance, what am I going to do? This could be a target. It's certainly not going to be where I buy. And in a choppy market, you want to kill your account? You want to make donations to Wall Street? Yeah, try buying through resistance. That's an instant donation. Try shorting at support. It's darn near an instant donation in a choppy environment. And this is where probably the biggest gap in most traders' game is not being able to differentiate between when a market is trending and when a market is chopping. And I mean instant candle, real time, not waiting for candles to create a pattern, not waiting for moving averages that are usually very laggy to cross or do some kind of fancy shape, by using just a tool that reduces this to traffic light, simple, bullish, neutral, bearish signals, right? And that's really where, when we're going through this year, where traders are going to get hurt, because let's use kind of the way Charlie Munger talks about inversion. The ways to make money are frankly many, and it's a myriad of ways. But way traders lose is usually 3 to 5 of the same things. If we identify what those losing things are and simply don't do those, or ask a unique question like Charlie Munger would, what are the 3 things I can do to guarantee that I lose money, to guarantee that I don't grow an account. Identify those 3 things. You might know them right now because you know you're doing them, but you haven't found a replacement for that behavior or an indicator to keep you from doing those things. Just identify those 3 things right now. If you want, share them below in the comments. Rog, I'm doing these 3 things, right? And this is why I know I can't grow an account, but I don't know how to stop doing them, or I don't know how to replace that behavior with better knowledge, right? Feel free to leave that in the comments. I know for me, when I was struggling with my trading, it had everything to do with where I was placing my stops, what type of market I was trading, choppy, trending, downtrends, right? And then lastly, my position sizing. Those were my 3 things that I had to figure out in order to grow an account. And on Wednesday, I'm going to talk a lot more about these things, and meaning that I'm going to show you examples. We're going to be updating the TradesViz. For those of you that attended the last webinar we did on the 5th, you saw that I shared with you all my TradesViz up until August of last year. Basically, it was, I believe, June of 2023 to August of 24. I'm going to update that, and kind of following along the conversation, I'm going to show you September, October, November, December, and January. And we'll have a full idea of what's been happening for, gosh, almost 2 years, a year and 3 quarters. So you can see the kind of alerts we're sending out in the mastery. Am I going to have losing trades? Absolutely. Am I going to have losing months? Last year, my losing month was April. And this year, I hope I've gotten it out of the way, but we'll see. My losing month was January. Both of them were small losses for the month, but I hate losing months. I've never had a losing year, and I've never blown up an account. And there are certain things that a trader can do to minimize that unfortunate reality for most traders. So if you want more information on the immersion coming up, just head right on over to my.simplertrading.com/immersion. But I would love for everyone to come to part 2 of the next conversation about current market environments, what to do, what not to do. And that's at simplertrading.com/consistency. But in the comments, feel free to tell me, hey, Rog, these are my 3 biggest problems. And then join me on Wednesday at 2 p.m. and we'll probably tackle a lot of that stuff and hopefully start to get the solution, fix that problem, because it is fixable. And it is absolutely fixable. All right. Have a wonderful weekend. I will see you all next week. And I look forward to seeing you all on Wednesday at 2 p.m. Eastern. simplertrading.com/consistency.